So the good thing is you were talking about what's good investment or bad investment. Well, a student loan is what
Mm-hmm.
we would consider good debt. So
Mm-hmm.
something that appreciates.
Mm-hmm.
A home you were talking about, that is when you borrow money to purchase a home. I would say to you, Kathy, that is also good debt because again, in theory,
Mm-hmm.
the home would appreciate.
Yeah.
So anytime you borrow to have something appreciate, so a business, a home, education is considered good debt. So that's on your side. That's really good.
Mm-hmm.
Where the trick is now because okay, well now I have a good income. What do? I do have this debt and I want my, in theory, net worth to increase because debt is simply a detractor of net worth. um
Mm-hmm.
so, and this is again going to be something that you don't already realize or don't already know.
Mm-hmm.
So it's not too sexy, but the very first thing I would say is to pay yourself first.
Right.
And so just like anything else, when you get paid,
Mm-hmm.
in if you could do this, I would literally have 20% of what my net paycheck go to a separate bank account. I would literally open up a separate bank account and I might label it student loan. And
Mm-hmm.
um, that is step one. Now, ideally, we want to get about 20% of what you make to be going to that type of thing. And take that with a grain of salt. That's the ideal. If you maybe you start at 5, maybe you go to
Mm-hmm.
10, and that so everybody's different. So whatever you can to do. But once you get to that 20% number, mathematically, that's the kind of the perfect place you'd ever have to go. Wouldn't ever have to go any higher than that.
Mm-hmm.
But before you even start paying, let's say, down your student loan, you definitely would want to have an emergency fund. So
Mm-hmm.
I can't discount that. And you mentioned you're married. So if you both, you and your spouse, are working, and again, I'm sure you already know this, but if you had like 3 months worth of living expenses,
Mm-hmm.
whatever that might be, let's just say it's 15,000. That's put
Mm-hmm.
aside in a different savings account
Mm-hmm.
that we don't touch. Now, if I'm not there, or if I spend $2,000 on tires, I don't go anywhere. I don't put money anywhere else till I fill that bucket back up.
Mm-hmm.
That makes sense.
Yep.
Um, Now, once I've done that, now I can go back to that again. If I'm trying to put 20% aside, there is some nuance to this. If your employer offers you a retirement plan and there's a match, you definitely want to take advantage of that just to get started, just to get the match. So if you put in 3%, they'll match you
Mm-hmm.
3%, just as an
Yeah.
example. You definitely want to do that because that's 100% return, and I can't beat that anywhere.
Yeah.
Once you pass that, then everything should go to your student debt. Now, when I say everything, um, and again, you probably have heard this, but a debt snowball. So if you have multiple loans, you would want to take the smallest balance one first and try to put as much money toward, make the minimum payments on the others and put as much money towards that one as possible. Um, if you do have federal loans, which might have lower interest rates, if you can consolidate those, we would try to look to do that.
Mm-hmm.
But more importantly is to get the small ones done first. So if you're putting
Mm-hmm.
$200 a month to a small one, as soon as that's gone, you add that $200 to another loan and just
Mm-hmm.
go and just, you see the snowball gets bigger and bigger and bigger.
Mm-hmm.
I wouldn't, again, now student loan is good debt. I
Mm-hmm.
wouldn't do everything just to get rid of your debt. Now, again, it is fact dependent and depends on the person. Um, if it was car debt or something like that, or credit card debt, I would say, Kathy, yes, we want to get rid of this too. It's a zero balance. But for student loans, I would be okay, however, amortizing that over a 20-year period or something like that. And you don't need to do more because, again, interest rates are lower. We don't even know, it might be forgiven. We've seen that happen.
Mm-hmm.
So again, unless it's very important to you to be debt free,
Mm-hmm.
it would give yourself some grace and don't worry about paying it off all at once or as fast as you can, because again, you took that time to invest in yourself. So you're just paying yourself back gradually over time.